So DPU increased 8.7% in the second half. Give us your thoughts, if you can, on what 2025 and the early quarters could deliver.
Right, I think interest rates will stay fairly high for a lot longer than most people think. So we've been planning for that. So last year we printed our inaugural 7-year notes to lock in rates, and these were locked in at circa 3.8% for the next 7 years, because our forecast really is maybe one cut for the year. So REITs need to manage finance costs very carefully.
Yeah. You actually divested of Lippo Plaza Shanghai, and which is one of the reasons also why we saw a bit of a bump up actually in distributable income. Is it safe to say that you're completely out of China, Mr. Han? And what does that tell us about how OUE Reit approaches this market that's seen better days, as some would say, in terms of property?
So the Lippo Plaza Shanghai was a seed asset at IPO. So it had been in the portfolio since 2014. It's a prime core asset. It had traded very well for the last 10 years. But obviously it had a declining leasehold, so circa 20 years and going a little bit dipping below that as well. Slightly older building, so requiring a little bit more capex. There's also, for the short term, a supply overhang in the Shanghai market. Now, REITs, we need to deliver continuous quarter-on-quarter, half-on-half, year-on-year growth. Now, we felt it was the right time for us to exit as well. I mean, we could have waited it out for another 2-3 years, and that would have, the market would have corrected and would stabilize and come back again. But we felt it was a good opportunity. There was there was an investor which was very keen to put it as their flagship asset in their fund. So we divested it, and we're looking at recycling proceeds. We're exploring sort of various options. We're looking at Sydney very closely. We really like Sydney because Australia, the rates haven't come off, so market is still, I would say, priced very fairly, so it hasn't seen a sort of bounce back. So we're looking at that closely. Tokyo is always interesting because rates are still fairly low, so yield accretive as well.
But is China off the table for now, or do you think that the worst perhaps has passed for this property sector that's so important to their economy and also seen a very turbulent last 3 to 4 years?
So for us, currently, we have no plans to sort of expand further in China. I mean, we looked at it over the past few years. There wasn't a right opportunity to get in at proper values because the market has sort of moved on quite quickly. Going forwards, the market should stabilize and it should sort of move on from there. Typical of any sort of market cycles, really, when you have supply-demand imbalances, it'll self-correct and then it will move on again.